It has been a rocky week on Wall Street. A lot of investors feeling the pain. So joining us now to break it all down, all the volatility is Chuck Zodda, the managing partner and the chief investment officer of Armstrong Advisory Group. Chuck, thanks for being here, especially this week, because there is a lot to discuss. President Trump gave his speech to Congress last night. He does not seem to be backing down from his quest on tariffs, and it doesn't seem to be sitting too well with investors. So where do we stand right now?
Yeah, it certainly has been a little bit dodgy in markets over the last couple of days with some, hefty moves downward, but even some big intraday swings. Yesterday, at one point, the S&P 500 was down 2%, rallied all of that back over the course of the day, and then in the last half hour fell 1.5% and ended up closing down. So it's been a very volatile market without clear direction. I think part of this is we're continuing to get some mixed signals from the Trump administration on exactly how they're going to continue with these tariffs. As you noted yesterday, initially we were hearing, yes, like we're going to press ahead with this. And then this morning, Howard Lutnick, the Secretary of Commerce, said that we should expect an announcement later in the afternoon regarding a potential compromise as it relates to tariffs. We still have not heard any details as to what that might mean. But I think part of this is that it creates an environment that's just challenging for businesses to operate in that if you don't know what the rules of the road are going to be, it's very difficult for you to make investments, either in expanding your physical plant, hiring additional people. And so I think to a certain extent, the uncertainty regarding tariffs has somewhat paralyzed certain businesses because they simply don't know what environment they're going to be operating in. And as such, they're saying, we're going to wait and see before we make any large moves.
Chuck, what kind of trickle-down effect will the tariffs have just in the average American household as far as spending? We've heard things like gas, grocery shopping is going to be impacted.
The estimates that I've seen, and again, I don't study that, myself, but the estimates that I've seen are that the average American household, if these 25% tariffs on Mexico and Canada stay in place, would end up spending about $1,200 more on an annual basis. Now, it's obviously going to be different because there is no, truly average American household. Everyone's a little bit different. And here in the Northeast, one of the big things that we have to deal with is the fact that we import a ton of gasoline from Canada to use in the Northeast here. And so the estimates that I've seen, this is data from Gas Buddy, which is an online tracker of, gas prices. They estimate that because of the Northeast's reliance on Canadian oil and Canadian gasoline, that gas prices in the Northeast, if these stay in effect, would rise somewhere between 20 and 40 cents a gallon over the next 2 to 3 weeks, and would stay there until the tariffs are removed.
And people are already paying such high utility bills, and so it's certainly a concern for a lot of people. The president promised that prices would come down on day one of his administration, but now we're hearing the term Trumpcession that's kind of being thrown around. Are you kind of hearing that sentiment as well?
I do think it's early to talk about, any kind of recession at this moment. We have seen a slowdown in the economic data over the last few weeks, but I think ultimately we're 6 weeks into this administration and we basically have 1 month of full data at this point. So I think we need a few more data points before we start talking about recession. It is something that, could be possible, but I think we'll have more information as we get through March and April. And I think by early May, I think you can look at this and say, hey, by the time we get to Mother's Day, we should have a much better picture of what the U.S. economy looks like, simply because right now there's so much uncertainty that's out there. And I think part of that uncertainty extends into how businesses are reacting in this environment and whether there's any kind of durable shift in how they're handling things, or maybe there's just, a brief couple-week pause at the beginning while they're trying to assess their options and figure out what to do. So I think that we are seeing a slowing in the economy that does have me, a little bit concerned, but I think we need a little bit more data before we start jumping to recession talk. I just don't think that we're there yet, and I think that we need to see how things play out over the next few months.
Sure, that's fair. Here's my next question on that. Could kind of the slowing economy potentially lead to a cut in the federal interest rate?
Yeah, this is something that I do think is very much in play here. We've actually seen interest rate projections start to come down for the rest of this year, with potential Fed cuts on the horizon later in the spring or early summer. As a result, what you've seen, mortgage rates have come down a bit from a little over 7% down into the 6.5%, 6.75% range. So that is something that should help to make things a little bit easier when it comes to the spring home buying season. But obviously, the thing that home buyers are still dealing with is insurance costs are still going up nationwide. You still have higher property taxes. And so even with lower mortgage rates, I think one of the questions that's out there is, does this result in increased activity? And also, if the reason lower mortgage rates are coming in is because of a slowing economy, do people make the decision, look, even with cheaper mortgage rates, I'm not going to take on the big risk of buying a house right now because I don't know what things look like. And so maybe you end up in a situation where lower rates aren't enough to get enough people off the sidelines in the short term because the economy may be weakening as well.
All right, Chuck, it'll be interesting to see how things all play out over the next few months. Chuck Zodda from the Armstrong Advisory Group, thank you so much for chatting with us.
All right, thank you.